Hello and welcome to another live trading session. Today is 22nd May, Wednesday. I think it's Wednesday. We're getting ready to put on another trade as per our schedule here. As you can see, the spreadsheet tells us today is the day to put another trade. And we did one a couple of days ago. It was Monday. And for those of you that have seen the video, I had some problems actually figuring out on my spreadsheet here. There were a couple of mistakes, and then I had to spend some time afterwards, after the session. I had to download the actual transactions from a Tasty Trade and go through everything into detail. And I found a couple of mistakes, which I now fixed. So now everything is actually correct. It was just that on one occasion we closed 10 trades together. They shared the same strike here, but it was all 10 together. When I closed them, I closed something wrong here on the spreadsheet. And then also I closed a short one of the put debit spread, thinking for some reason that there was a part of naked put series. And that caused obviously the picture to be a little bit skewed. So I had to actually sell it back, because I bought it back to close, and I sold it back so that PDS is now back intact and everything is fine and all of the numbers are fine. So that's good. Also, I played a little bit with the spreadsheet. You know how I always like to improve and add on things. So the next improvement I have here, if you can see at the top, I will have some additional metrics to keep us a little bit in check, to give us a larger picture, big picture, instead of concentrating on these weekly numbers, which are not really that important in a big scheme of things, because we're not trading for 2 weeks, we're trading for years to come. So we want to make sure that we stay on track over years, not over any particular short time frame. So when you look at it like this, you might be thinking, why is this happening, or why am I just tracking the market? But when you zoom out, it looks a little bit better. But then I put the numbers here, and this is actually now measuring the maximum drawdown. So from any high point going forward, from the high point to the low point, that would be a maximum drawdown. Like, for example, here, it would go from here to here. That's a drawdown. From here, the blue one, to here, that's a drawdown. So in the columns N and O, we have the drawdown on that particular date, the maximum drawdown on that particular day, and it goes from the beginning all the way to continues as we go on. And then here it shows the largest one of all, and since inception. And then this one here, this is years, because we measure CAGR in years. So we're almost at 2 years mark. We started the first trade on May 27th of 22, and now we're May 18th. That was the last recording here of 24. So that's practically almost 2 years. And that's needed for the formulas here, obviously, to be able to figure out everything. So the next cell here would be Netlick CAGR, and then SPY CAGR, just to compare the two, to see how we're doing against the market. And obviously, then it's very easy to calculate the MAR ratio, which is basically showing you your drawdown versus CAGR. And the higher the number here, the better. Our goal is to be around 1, so we are way over that for now. Obviously, we didn't have any real pullbacks in the market, which will obviously bring this down. But staying around 1 is our goal. As you can see here, market is already under 1. So this is good to note, and just a good reminder that even if we don't look that great on any particular short time frame, when you look back for 2 years, we look pretty good. We are at 20% CAGR, and this includes all the fees and everything. This is coming straight off of the Netlick, so everything is already figured out into the number. And one thing to point out is I started the UOTS strategy here on November the 10th of 23, but that's only kind of like 6 months. And if I would only count from that point. The CAGR would be closer to like 28%. The max drawdown from that point would have been around 6%. So it would be much better, but that's a very short time frame. So for now, I included everything from the May of 22 to have a little bit longer time frame. And that's why the results are slightly different, but it would probably be pretty similar because the previous strategy was very similar in nature, selling some naked puts and buying some put debit spreads, just a different ratio and all that. But yeah, that's on that. Somebody says we see a blank screen with your logo. Oh, why didn't you tell me this earlier? Oh, shoot. Let me check. Let me see if I'm sharing correctly. Oh, why? Let me see. Okay, so auction says he can see the screen. See your Excel. Okay, so it's just you, DB. For some reason, it's only you not seeing the screen. So we should be all right. It might be something. Well, the worst case scenario, you'll be able to see the recording. So don't worry about that for now. I'm glad we have that now recorded. So let me go back to what I was saying. Yeah, maybe in the future, maybe when we have few years of data, maybe we'll just cut it back to yields just to be able to show the yields strategy performance in isolation. But for now, this is what it is. Any questions on this, guys? This is going to be part of the next version of this trading spreadsheet, and it automatically calculates the formulas that are going down. So anytime you add new info to the left, it will recalculate everything. So it should be good. And by the way, for anybody who is watching, the spreadsheet is available as well as our trading plan is available for $22.95 at the moment, and you get 3 months worth of Discord membership. Link is in the description below, and make sure you like the video if you find it useful. Now let's go to trading, and actually let's put a trade on. So to start off, we'll go right here, just fill up this real quick, and let's check the metrics. VIX at 1213, our delta and theta 50 and 31, and then our buying power, it's probably still going to be pretty low, 8.5. So let's take a look at that, 8.5. All right, and I know we're waiting for NVIDIA's earnings call after the market closes, but we're not going to wait for that. And yes, everybody's expecting a large move one way or the other. We really don't care. As far as I'm concerned, chances are 50-50. I have no idea whether it's going to go up or down afterwards, and nor does anybody else. The market always finds an equilibrium where the chances are 50-50. So yeah, we might put a trade on. The market might go down afterwards, and that's part of the deal. It can also go up, and then all of our trades would benefit. So it's really not an issue, not a point for us. We just go ahead. Our metrics are fine, so we are good to go. And with the low VIX, we are looking at, as a default, we are looking at 13 delta, but we can always play around a little bit depending on the available strikes and whatnot. But let's take a look at the trading, at the platform. So we go to MES. And just as a refresher here, we are looking at around $1,000 per week. But we can split it into smaller chunks, 400 or 500, doesn't matter. So we want to trade a little bit more often, and we'll go with the low VIX. We like to go, we like to lean towards the longer expiration. So 90 is a default, but we can go here. 13, we already have 3 here. Ideally, we don't want to sell them because it might be a different price, and then just it's a little bit easier to track if we don't do the same thing. But let's just see what that would pay us. It would be 517 here. If we go a little bit further away to 12 delta, 4850, we get 460, and that's actually pretty good. I think we'll just go ahead and do that. So these things are not like strict set in stone. It's just a guideline to go at 13 delta, just to start looking at around that that strike, and it's filled. So let's again do the math together. We go to this thing here, and let's move it. Just move calculator. Why don't you move? There you go. All right. So we received 3075. So we go here 3075 times 3, and then times 5 for the multiplier. So that's 460 and change. So times 0.2, that gives us approximate expenditure, including fees if we can. So we want to stay, somewhere around, call it $80 to cover for the fees and still stay under 20%. So we can do 75 or 100 wide, and that's going to depend on the delta that we choose. And it's not really like crucial whether we go one or the other, but let's just take a look what we have available here. We're going to go to a shorter expiration. Let's go 70, and let's just start. We don't want to go here. Let's just go here, and then let's go 75 wide. So that's under. Maybe we can do 100. So we could do 100, but we would spend a little bit more. By the time we had the fees, I think we said we can do 92. So that leaves us a little bit. It's not bad. We could do this, gives us a nice 100 wide PDS, or we could just underspend a little bit and stay right here, which is what I think we'll do. And let's first see if we can close this at this price, and then if not, we'll just go here, replace, up it up a little bit, and now we're chasing it. We have to see, let's see the price. Let's see, mid price is 1350. We're offering 1375. So it should close, but we don't want to hang around for too long. Let's just close it at 14 and call it a day. All right. Okay, so that's closed. Let's open this, because then it's easy to complete this. We go to UARTs, and let's just start right here. Okay, we go 68 MES, today's date. VIX was 12 and change. It doesn't really matter precisely, but okay, 12.20, we can do that. Delta was 12. We moved it down. I think it was 48.50, but we'll double check. And it was 120 days. We received 30.75, and we did 3 of them. And let's just double check that. 121 days. Sometimes these there's one day off. Let's see, September 20th should be the expiration. Let's see what we get here. No, I'm sorry, not December, but September 20th. So it is 121 here to get us to 29. Okay, and then 48.50, 30.75. Okay, that's cool. We did that, and then we just go move to the right. We go here. It's a MES, and the strikes we did 50 to 50 to 50, and then 51.75, and that was 70 if I remember, but let's double check. 70, yeah, and we paid 14 minus 14 here, and we did 1. Boom, done. Okay, so that looks good. And let's now go back to our main sheet here and just double check, see where we at. 460, next trade scheduled for Friday, so that's fine. We have almost 11,000 in open value, the max value of debit spreads. Now, keep in mind, some of these are expiring pretty soon. Let's check. So 9 days. Okay, well, so we have, it's not that bad. So we have plenty of value here. Our full book white plus is not large because we had a bunch of trades come off last week, so we are a little bit under exposed, but we are still on schedule, so everything is fine. We're selling enough premium to hit our targets, and that's all on that. Let me see if I'm missing any questions, guys. Anybody? Notional exposure is pretty low. Yeah. All right. If not, have a fantastic rest of the day, and I'll see you all on Friday. Bye.